All right, well, welcome back, everyone, and thank you for joining us for this session number 4. If you weren't here on the past 2 sessions, I'll let you know that my name again is Kyle Neff. I am the LAM Treasurer and the Public and Research Services Coordinator for LSU Special Collections Library. Again, welcome back to everyone who is either joining us for the first time today or who is joining us once again. We're happy to have right now with us Rosehn Gipe, who's the Executive Director for the USS Kidd Veterans Museum. And she's going to be presenting credible internal controls on stabilizing your organization. We ask that you just go ahead and stay muted during the presentation and submit any questions that you have through the chat while we're going along. We'll have a little bit of time afterwards for some of that question and answer period. Again, as you heard just a moment ago, the session and every session today is being recorded and will be made available afterwards. If you don't wish to appear on the recording, feel free to go ahead and turn off your video. So without any further ado, I'll go ahead and turn it over to you, Rosehn.
Good afternoon, everyone. If you cannot hear me very well, let me know. I am the Executive Director at the USS Kidd, and I came up to this position kind of differently from a lot of other directors in museums, in that I came up from the accounting and business management side of museums and not necessarily the historical curatorial side. If I sound a little preachy about these issues, it's because I believe they are vital to making your organization a stable, financially stable museum, and important to avoid any kind of fraud or theft. A lot of the controls apply to both your collection side as well as your financial side. So very relevant for everyone. So we'll go ahead and get started. If you have any questions, just type them right into the chat and I will try to get to those as I can. I may do what we tell our top tour guides here all the time. If you don't know the answer to the question, do not try to make it up. Just say, I don't know, but I can probably find out for you later. So don't be surprised if that happens too. So I labeled this CIC because that is a nautical term, a Navy term for your Combat Information Center, which is an area where all the information goes into the ship to be analyzed and a solution hopefully determined. So finance is really your tactical center of your museum, whereas on the ship, it's a tactical center. It's your center for operations. What happens there is you receive communications and data from multiple channels or multiple sources. You have to organize and process the information into a usable form and provide timely information flow on a ship to the battle command staff, in your museum to the staff and board. There are a lot of different sources of information. You may have cash coming in from sales, admissions, memberships, special events, donations, vendor commissions, point of sale programs. A lot of different information comes into your finance department. You get reporting information, you get bank statements, you get maybe investment statements. You get credit card statements, you get billing from vendors, you get all your payroll information, whether you do that in-house or from a payroll preparer. You get input, the finance department gets input from their staff, from the board, from the budget. All this comes together, and you probably, in many cases, get information from the government, meaning rules and regulations, reporting requirements, all different sorts of things. At any time in any of these areas, fraudulent activity may be present. So this happens in a lot of organizations in a lot of different ways. And many times we often think that it's not if fraud or theft will ever happen in your organization, but when fraud or theft may happen and how to eliminate it, how to prevent it, how to nip it in the bud so that it doesn't get out of hand. So what do we mean by internal controls? Internal control is a process designed to provide reasonable assurance that you have accurate and reliable financial reporting. Your operation runs effectively and efficiently. You're complying with all the laws and regulations, and you're safeguarding your assets, which is one of the most important things. And safeguarding the assets applies to both your finances and your collections. So to get accurate and reliable financial reporting, you really need an adequate software system. We use QuickBooks here, which I find extremely adequate, even more so now that you have the online version, so you're constantly getting those great updates. You need proper access, which is limiting access to only the people that need to be dealing with it. Needs to be an understandable format so that when you produce a statement or a report, people who are not accountants can actually understand it and make use of the information. And you need to produce timely reporting. So you hope that your business office, whether it's your accountant, your CPA, or someone, a bookkeeper in the office, is giving you reports in a timely manner. And timely for us is generally monthly, although at any time, with the software system we use, I can request a report, whether it's a profit and loss statement or a balance sheet, and I can have all the information there virtually as of that date. So it's a very easy system to use. So for your operational effectiveness and efficiency, you want to make sure you're providing a quality service, which you're doing as a museum, that you have adequate staffing, which a lot of us never will have adequate staffing, that the people who are working in your accounting, handling your money, are qualified to do so. A good way to keep this under control is to have written job descriptions and to follow those, have personnel policies. And I'm not talking about some giant manual that's 100 pages long, but something reasonable that you can actually use. You always have to comply with the laws and regulations. And these could be from any level or all levels. So you have federal, many of us have to comply with federal laws and regulations. As a museum, as a 501c3, you probably have to file an IRS Form 990 every year, which is a lot of good financial information. You have state regulations, local agencies you may have to comply with, whether you are city funded or various other agencies. We all have to comply with labor laws. And then there's a certain amount of volunteer accountability in there. So the biggest issue with safeguarding your assets is protecting those assets from misappropriation and misuse. This can be protecting your cash, protecting your bank accounts, protecting your collections from misuse. How do you do that? There's a lot of different ways. So with your money, you want to make sure your accounts have controlled access. So not everybody in your organization has access to your accounts. Designated signature authority. You typically have a couple of people in your organization to sign the checks, and you want to make sure that the person who's doing your books never has sole signature authority. I know in some smaller organizations where you may only have 2 or 3 people working there and you need someone to sign the checks, and it sometimes may be the person who's doing the books, but they never should be the only person signing that check. Somebody else needs to sign that check with them. Here we have 2 people sign checks. It's never just one. And we only use the person doing the books when we are absolutely, there's no one else available. Right now, as a director, I sign checks. I don't do the books. Business manager can in a pinch, but our treasurer is the person most likely to come in to have that second signature. And you need processes for cross-checking, whether it's looking at the bank reconciliations or checking the bank statements as they come through, just taking a good look at the checks that you're signing and making sure there's the proper backup for those. You know, who is this person that I'm giving this check to, and what did they do for this? What did they provide? A lot of different things you can ask there. It's always good to ask questions if you're in that position. You should never see a check made out to cash. That's a really big no-no in the business world here. As far as collections go, you should have controlled access to your exhibits and storage. This means that if you've got a key that opens the building, the bathroom, the mechanical room, it should not open your exhibits or your storage space. You need to have that key differently, and only those people who need to be in there should have a key to the exhibits or storage. You should do a regular inventory, which is very difficult, and a lot of people are not able to do that. I know here at my museum, I don't think an inventory has been accomplished here since about 2014, and that is not a good thing. So you need to know what you have and where everything should be. Sometimes you can just go through your exhibits or your storage area and just take a general look and see if things look like they have been moved around or disturbed. And if you are responsible for them and you don't remember doing that, then that's a big red flag and you should take a look at it. You should also look at your de-accessioning policies. We all have things in our collections that we find down the road, and you wonder, what were they thinking when they accessioned this? What were they thinking when they accepted it into the collection? This just has absolutely nothing to do with our mission. It needs to go away. It needs to find another home somewhere, or if it's in very, very poor condition and it's not something that's a valuable item, maybe it's time to just bring in the dumpster and take care of it that way. But always make sure you have the proper paperwork. Make sure it was yours to begin with so that you can dispose of it, and then make sure that you have recorded that so that 30 years down the road, somebody comes looking for it and you can let people know either that it went to another institution or what exactly happened to it. Never be afraid to say no when somebody offers you something for your collection. They may think it's the most fabulous object in the universe and that you will want to have it on display 24/7. And you know it's not, because you already have 12 of them in your collection. And so it's time to just say, no, we don't really want to accept that. So there is a statement called SAS 99. SAS means Statement on Auditing Standards, and it's the consideration of fraud in a financial statement audit. I'm sure most of you, I hope all of you, actually have an annual audit completed. As a quasi-state institution, the USS KID must have an annual audit. It's required by the legislature. What the SAS 99 talks about is that an auditor is not there to look for fraud. An auditor is really there to look for material misstatements in your financials. And sometimes they are able to determine that something is terribly wrong, and they may be able to identify some fraudulent activity, but that's really not their job. 9 times out of 10, if there's fraudulent activity, someone else is going to identify it before your auditor. But your auditor is your ally. They're there to help you make things better. They are not someone you should be afraid of. You shouldn't have any trepidation when it's time for your audit. If your business manager, your bookkeeper, your accountant has done their job, they will have everything in order and there won't be any problems. If someone is deathly afraid, if your bookkeeper is deathly afraid of the auditor coming in, you need to question why that is. And maybe there's something going on. Maybe they're not doing things properly, and they're afraid that the auditor is going to find out about that and uncover a lot of things that were incorrect or where money was mishandled, misused. So really, an auditor just provides an opinion on whether the financial statements are fairly stated and comply with GAAP, which is the generally accepted accounting principles. They're looking for material misstatement and may determine, but it may not be their job to determine if the misstatement is intentional or unintentional. Maybe they've determined that there is a misstatement and they suspect that you're trying to hide something. So that could be intentional. It could just be an error at times. Sometimes the misstatement occurs. You hear it in the news sometimes with these big companies that there was a misstatement because numbers were transposed. And so that created the misstatement. So some of the conditions that are present for fraud. It's almost like what you hear in murder mysteries all the time. Do people have means, motive, and opportunity? And that creates a condition. So there's incentive or pressure. This provides the motive to commit fraud. So someone is under financial pressure. Someone has maxed out their credit cards. They don't know how they're going to pay it off. There's a motive there. Someone has opportunity. They see an area in a museum where they can commit it, and it might not be too difficult to maybe steal something. And they have the ability to rationalize that either this will be okay because the museum is huge and they've got all this money. I really deserve it. I'm not paid enough. So they have all this rationalization going on in their head. So what it comes down to is someone saying, I need it, I can do it and get away with it, and I deserve it. So to prevent things that happen, and the reason I'm going back and focusing on fraud a lot is because if you've got fraudulent activity, once again, you cannot have this stable organization financially. You've got people that are stealing, pilfering, skimming, you're not going to be financially stable. So you need to brainstorm with your staff and figure out, if someone were to steal from your organization, how would they do it? Where do you think it's most likely to occur? And how would someone try to cover it up? So if you sit down just around the table and start thinking about all these things, you'll probably uncover places in your museum or in your bookkeeping or in the procedures that you use to pay bills, look over your payables, look over your invoices, that you might be able to come up with some ways that this could happen. And then you can determine good ways to prevent those, or at least to make those less likely to happen. So you want some really good controls. And again, your auditor can really help you develop some of these, particularly when you have small staffs, so that one person doesn't do everything. You sort of spread the duties. In fact, it's called segregation of duties. Again, you need accurate, detailed job descriptions for your staff, for your board committees and officers. Get some of those officers involved in this. And segregation of duties. So different people are doing different things. Here's an example that we came up with, a small organization, and how to handle donations, incoming donations. Let's say they're coming through the mail. So we have 4 people in this organization. So we have the first person who picks up the mail, logs the donations in a spreadsheet. They give the donations to B, this is physical checks, and they send the spreadsheet over to the 4th person. This person, the second person, B, inputs the donation information in a database. Different organizations use different things. Whatever contact management database you're using is good. They generate the acknowledgement letters. They give the letters to another person who's going to sign them. And then they compile the deposit list again and send it to the 4th person, D. C signs the letters and cross-checks it with the database. So you've got the information coming through the database, you've got the letters, you're making sure they match, that the numbers, the amounts match, and then they mail the letters off. And the last person cross-checks the deposits with the spreadsheet log, and then finally deposits the checks into the bank account. So it sounds very bulky on paper, but it's really not. Once you put it into practice, you've got a steady flow of the information, and you've got different people handling it and always cross-checking with each other, so that everything goes in there. You have to sometimes, as the director need to check up on different people to make sure that the person who's picking up the mail is actually logging those donations in. You have to make sure that if you get an email and say from someone who says, hey, I sent you a donation and I never got a letter, never got a thank you, and unfortunately I sent you cash, then you need to figure out what's going on there. So it's not perfect, but with a small organization, you can certainly do it. There are large organizations that use what's called a lockbox, and everything goes to a box at a bank where the bank opens everything, puts it directly into the account, and then basically just sends you all the information. That may be great for a larger organization, doesn't always work well with a smaller organization. And there again, I know a lot of you, when you receive checks, you probably get additional information off that check that wouldn't work here, where sometimes people write memos with those and other various things. So it's very important always to interact with your auditor, and they can help you develop processes no matter how few people you have. If you have few people on staff, get your board officers involved so that they can help you out with this. Your auditors are your friends. They're not some adversary. And again, if your bookkeeper or CFO dreads that audit, you need to really look at why they dread that audit. So there's some high-risk areas in museums. And for cash checks and money orders, you want to make sure they're locked in a secured area. Doesn't have to be a safe, but should be able to be locked up. They're deposited regularly. Sometimes that's regularly is once a week. Sometimes that could be once a day, depending on what kind of cash flow and checks and money orders you get in. Since COVID, a lot of the cash and checks have become credit cards. which are a little bit more secure, because those are normally done through an online payment. So you never even see the card, you never have any contact with it, and it just shows up in your bank account. Cash should be counted by more than one person. You get your daily reports from either your point of sale system, your cash register, whatever that happens to be. Make sure they match up. When you get checks in, you need to maybe consider about either stamping them as they come in for deposit only, so no one else could take those and put them into their own personal account. And receipts are usually issued, and a receipt can be a letter. One of the easiest ways for an employee or even a volunteer to steal from your organization is by what's called the skimming, which means they're just taking a little bit here and there, and it adds up. So very easy for people to take cash from your donation boxes. You may have even seen the situations in various museums where the public was stealing from the donation box using various ways. Not a very secure donation box. Your donation boxes need to be in visible places, so that sort of thing does not happen. Someone working in a store or selling tickets, working with a cash register, can very easily not enter the cell or void the cell after the fact and pocket the cash. This is where if you have numbered tickets, it comes in very handy to do a cross check there. Someone who opens a bank account, who can open a bank account for you with access to your account via debit card. That's another easy way. Acquiring access to an organization's credit cards and then using those credit cards for personal expenses. And then writing checks to themselves or requesting reimbursements without proper backup. That's another pretty common way. Someone who comes in and says, well, you know, I bought this for the organization, or I went to this place and I need reimbursement, but I lost my receipt. Very easy to do. In disbursements for payroll, a lot of us use a payroll company. But still, you probably have timesheets or some kind of electronic timekeeping record. Timesheets should always be signed off by the supervisor, should look through them and make sure they're all accurate. Leave records need to be very accurate, and your payroll service provider should provide the proper documentation to you. When you're dealing with your vendors, you need authorization for purchasing. So that is purchase orders. If you want to use that, a lot of us are small enough, we just go with verbal purchase orders, but there needs to be something down there that says, yes, I agreed to purchase this. Verification of delivery. This is the packing slip that comes in. It should be matched to the invoice and to the purchase order if you use those. You got to make sure something was delivered. Somebody can't just tell you that it was delivered. You want to see that piece of paper. And signing off approval for payment, recording it properly, and making sure you have the proper signatures where you need them. Some ways in larger organizations, it's can be common to have phantom employees. These are no-show jobs that someone has set up for their friends and relatives. They're on the books as working there. You may not know if you've got 100 employees who these people are, where they came from. They never seem to be there when you're there, and yet they still get paid. So you want to make sure everybody knows who the employees are. Sometimes accountants have or directors have self-awarded raises and bonuses. And that is also fraudulent activity, and fabricated timesheets where someone is padding the time that they have actually been at work. I've seen a lot of cases with phantom vendors where a treasurer of a nonprofit sets up a business and provides no services or products, but has really slick looking invoices that get presented for payment. And it turns out it's not a real business. It's owned by the employee or a relative. And no one is checking up to see what their product or service is, and they've been paid. So another way to steal from your organization. So things you can do to make a better running, better controlled situation in your museum. If you want to keep all of your employees on their toes when they're running registers, is just to go down to wherever the register is and randomly print a report, cross-check it against the ticketing, see if the report that says they've sold 10 tickets and you only have 9 sold or 12 sold, or it looks like 12 are out there, but the register says 10. What happened to those other 2? And check the inventory. In fact, today at the USS Kid, we're doing inventory in our store this afternoon. We try to do that every quarter. A lot of places only do it once a year, should probably be more often. Have 2 people open and count the donation boxes together. Don't allow that just one person who says, oh, I'll do you a favor and I'll go take care of the donation boxes for you. And also the key should be locked away to those donation boxes. It shouldn't be on the building key ring or that everybody's got one. So keep that away. Tighten your controls over petty cash or eliminate it altogether. I am a fan of eliminating it altogether. There's absolutely no need to have petty cash in a world where if someone has to go buy something, they can use a credit card, or they need the purchase order for it, or several different ways. No need to have petty cash around that can just be used for any particular purpose or no purpose at all and just taken away. And always keep the cash in a locked, secured location. Again, for the checks, a restrictive endorsement immediately is a good idea. You stamp the back of the check for deposit only to your organization only, and then keep those checks in a locked, secure donation until they're ready for deposit. People can take unendorsed checks and manage to get them into their own bank accounts. It does happen. They do things like sign them over and forge a signature and sign them over to themselves. A whole lot of different things can happen with those. On outgoing payments, maintain the numerical integrity of your checks and the physical security of your blank checks. Keep them locked away. If you're a check signer in your organization and your bookkeeper brings you a stack of checks to sign, and they go from 112 to 114 and there's no 113, ask where number 113 is. They should be able to tell you that it was voided and show it to you. It shouldn't have been, oh, well, it got chewed up in the computer or the printer or something to that effect. Find it. It could have been taken, and somebody could have written a check to cash, and then you're out. So always take a look at that. Again, never make a check payable to cash. Don't pre-sign blank checks. It's very tempting to do that if you're taking a vacation and you're the only check signer, and you say, well, bills could happen, we need to get things paid, so here's 5 checks I've already signed. Very dangerous thing to do. Have appropriate signatory authority, which is know who's supposed to sign your checks. Make sure the bank has the proper signature card. Review the canceled checks and have someone that's outside of these functions to review the bank reconciliations. On your credit cards, limit the number of credit cards and accounts. You should really only have one. If you're a small to medium sized organization, you really don't need any more than one credit card account. and keep the limit relatively low. Unless you are using it for a line of credit, extreme situations, the credit limit should be low. Credit card companies are happy to give you more credit. You can limit it, keep it at whatever limit, 5,000 or whatever. And if you foresee that you're going to need a lot very quickly, they will up the limit for you. But in the meantime, your limit is low, so someone can't come in and take your credit card and suddenly spend $10,000 somewhere. Keep the cards in a locked, secure location, issue them to employees only when they're needed, and return them after use. Have a policy for the use of them, and there should be a receipt for every charge on every card. This is part of the reconciliation process. You get that credit card statement. Every charge on there should have a receipt to match up with it. Things that you need to consider, things you see questioned on the 990s. Do you have a conflict of interest policy? Do you have a whistleblower policy? Those are two pretty important things. Bonding insurance, if you feel you need that. A code of conduct, and this is financial as well as collections. Mandatory vacations, and that's kind of an odd one that you may not have seen before. If someone in your organization is very reluctant to take a vacation, you have to really question why that is. They may be afraid if they leave, then something's going to be uncovered while they're gone that may be something they've been doing that they shouldn't have been doing. So mandatory vacations are actually very important for your mental well-being as well. And a fiscal procedures manual. And in your fiscal procedures manual, you should outline a lot of the internal controls that you have. So to wrap it all up, we know that we need to have good internal controls to have a good, stable, financially stable organization with a collection that is under control. But we also know that bad things happen to good people. And our common reactions are, we can't tell our members something bad happened, somebody stole from us. We can't tell our towns or villages or parish. We can't tell the public. That would be just awful. We can't tell the comptroller. Let's just hope no one notices. Good person made some mistakes. Give the embezzler the chance to resign quietly, because we don't want to be in the news. And that's actually not what you want to do. You want to be able to investigate what happened. You want to get your board involved. You want to find out where you went wrong so you can fix the problem. You want to even perhaps pursue some kind of recovery from the perpetrator. You want to figure out your policies and procedures moving forward. And if the Attorney General writes your institution, please respond to the Attorney General. I just have a few things that have been in the news recently to let you know that actually this all the time. Susan B. Anthony Birthplace Museum. Here is the face of fraud. This person embezzled $31,000 from this Adams, Massachusetts museum. And this is just this year. She just got in too deep. She started using it for personal expenses, and one thing led to another. And so now she faces about 3 years. Small organization up in Port Huron, Michigan. Their annual budget's about $25,000. They had someone, their board treasurer actually used about $15,000 in their funds for personal expenses. And it was discovered by the board president, who was looking over their tax filings. This person, actually, this was a really interesting one. He used a credit card from another defunct nonprofit, and then started getting cash off that credit card with the intentions of putting it into his Hall of Fame, but actually using it personally as well. So there was identity theft involved in that particular case. This one's up in Alaska. Former director, really interesting one. He maintained access to the PayPal account after he left the museum. This is the first instance I've found of this one, where he managed to take $11,500 and have it transferred to his personal account through the PayPal account. So if somebody leaves your organization, make sure you change your password, whatever they had access to, change the passwords, change the information so something like this can't happen. And it's not just here we had an intern who systematically pilfered items from the museum collection and then passed them off as his own collection. Former volunteer here stole letters from the Buffalo Museum and then tried to sell those letters. And this person in the French Museum stole fossils and was selling them on eBay. So it happens all the time, and you just have to be very, very vigilant. And I think that wraps it up for me.
All right, well, thank you very much, Rosehn. We're going to open it up now. If anybody has a question, feel free to enter that into the chat. Or if you'd like, you can unmute yourself and we'll see if anybody has a question for us.
Thank you, Rosehn. I started out in collections, so I was very aware of collection policies. And then I got thrown into managing and directing, and a whole fiscal world was open to me. With credit cards and the front desk and deposits and all that stuff. So, one thing that stuck out, and I never really thought about it, is we were always told that they don't want to see a lot of voids at the register. And we have to always justify it was voided because it's always because, oh, I'm a senior, you ring it up and then they say, oh, I'm a senior, and they want the senior discount. Mm-hmm. But I never thought about what like I said, for some reason that stuff that you said that people, you put it in and you void it and then take the money, or, that it can be a fraud thing. And that is, to say the State Museum, they have pretty tight rules about our fiscal things, like I said, having to justify a void and how many times we do a deposit and driving to the bank, not walking to it, and all those rules. And but yeah, I guess fraud can happen and I'm a very trusting soul, I'm not gonna lie. but yeah, it kind of explains why all these rules are really in place. Like you said, checks and balances and rules and justifications, and you've got to be able to back up what's been happening.
Mm-hmm. And it's a whole different world, first of all, from what probably a lot of you do, but it's just one of these important things. If you can't get a handle on that, then it's very difficult to become a stable financial museum where you're not worried about, how am I going to make payroll 2 weeks from now, because I feel like more money should be coming in, but where is it? I see someone says open sales, keys on the register have been another avenue to theft. And that's true as well. If in your store, someone can just use the open key because we don't have it programmed in for a particular item, then that's another way. So someone can use the open sale as something less and then pocket money. Another example of skimming. And I had one more example. I think I didn't put it in my presentation here. And it wasn't a museum, it was actually a library, just recently in the news. It happened over about a 12-year period over in Austin. But an accounting associate started ordering printer toner or copier toner. And over the 12-year period, he ordered about $1.5 million worth of printer toner and then sold on eBay through a reseller about $1.3 million of that toner. So He was having a lot of it just delivered to his home. And he also had access to about 10 different library credit cards. And he spent about $18,000 on personal expenses using those different credit cards. So I'm not sure why one library had 10 different credit card accounts, but they did. And after the fact, the library and the city actually admitted that their policies and procedures were so extremely weak that this was able to happen. So when they put it out there in the news, it helps all of us learn what can happen and how we can prevent it in our own situation.
All right, well, I don't see any more questions or comments in the chat. So I want to thank you, Rosehn, for leading such a great talk for all of us, for kind of some of the showing up our financial workflows and everything. And thank you to everyone for joining us. We'll be sending out a survey that we ask that you just all take a look, review over that, and send it back to us to kind of help provide us some feedback for all of our future and current programming opportunities. And then lastly, I want to invite everybody to rejoin us back at the top of the hour at 2 o'clock, when we're going to be hosting the Lieutenant Governor, Billy Nungesser, here to kind of give us a talk for all of us. So invite to see you then at 2. Thank you, everyone.
All right, thank you.